To now yield 5 minutes to my good friend, the gentleman from Nebraska, Mr. Flood, who serves as the subcommittee chair for the Housing and Insurance Subcommittee. Mr. Flood.
The gentleman from Nebraska is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Speaker. I want to thank Chairman Hill for his attentiveness to this issue, and I'd like to thank my colleague in the Senate, my co-lead, Senator Pete Ricketts from Nebraska, for championing this effort and getting the resolution through the U.S. Senate in record time, in less than a week. He beat us to it. There's a lot of reasons to support this resolution, eliminating the larger participant rulemaking from the CFPB. Number one, think about this. The CFPB finalized this rule in the 11th hour in January, days before the transfer of power, well after other agencies stopped their rulemaking. Number two, the rule itself is effectively a regulatory power grab by the CFPB's outgoing Biden nominee, Mr. Chopra. By designating companies engaged in payments activities as larger participants, the Bureau will get to expand their examination authority over an amorphous and ill-defined group of firms with payments tools. Given their track record, I think it's fair to say that we should not be supporting greater exam reach for the CFPB. But I don't want our concerns to remain abstract. Let's take a look at some of the practical effects of CFPB examination that would have over these payment firms. First, let's take a look at some of the problems with how the rule actually distinguishes who is and is not a larger participant in payments. The rule does not only apply to tools where consumers are using wallets to exchange funds on a peer-to-peer basis, it also applies to any number of payment intermediaries that assist small businesses and merchants. For example, express checkout tools would be affected by this rulemaking. Let's say you want to buy an item on the website of a small retailer in Lincoln, Nebraska. If that website allows interfacing with express checkout tools, as many do, then you're going to see the effects from this rulemaking on their ability to easily accept payments from their customers. Congress aside, everybody in this room should fear what happens at my house when my wife does not have access to express checkout. According to a survey from the Small Business and Entrepreneurship Council, 53% of small business owners use express checkout tools. When asked whether express checkout services help their business succeed, 94% of small businesses agreed that the online payment tool is boosting their business's growth. Yet, despite the obvious potential for Main Street and small business effects from this rulemaking, the CFPB failed to conduct any substantive analysis of the effects this rulemaking would have on small businesses, or even conduct a sufficient cost-benefit analysis of the rulemaking more broadly. The reason? The Bureau was less interested in the cost of the rule than in expanding their own regulatory reach. This rule is a perfect example of regulate first, ask questions later, and that was the approach of Director Chopra. Ultimately, this style of regulation is going to chill innovation and hurt the smallest players that depend on these technologies to compete with the big guys. I'd like to submit a letter for the record led by myself with 20 Financial Services Committee Republicans in 2023 for the record.
Without objection.
In addition, the Bureau has consistently tried to imply their authority would not only apply to tech companies, but there's a chance they could bring merchants into their regulatory purview as well. The General Counsel of the CFPB said in a speech during Director Chopra's tenure that merchants might be implicated as large payment players in the future if they aren't quote-unquote mom and pops. Last year, in response to a question on the record from me on this topic, the director made the case that a merchant, quote, that incorporates payment capabilities directly into a website, end quote, could potentially blur the lines between banking and commerce and therefore be subject to the CFPB oversight in the future. However, Dodd-Frank explicitly calls for an exclusion for the merchants from the CFPB's regulatory purview. That idea that a merchant engaged in a commercial financial activity due to payment activities in the merchant's own store or website is outright ridiculous, and it represents yet another expansion of the CFPB's rapidly growing authority. Finally, I'd like to highlight another major concern with CFPB examination authority of these firms and what it would bring. The firms within the scope of this rulemaking are payments firms, but some of these firms also have a social media element to their business. If we fail to act here in Congress, you will have career bureaucrats from the CFPB with the authority to examine some of the most influential social media companies in the country behind the scenes. Do any of us really think that a liberal CFPB examiner would restrict their comments to only a social media company's payment activities? Are we sure they wouldn't provide some quote-unquote feedback on the free speech policies of Meta or X? Leaving this rulemaking in place could provide the next Democratic administration the tools they need to more directly influence even